Day and night, we always look for a perfect spot to stop, chill, and eat. Don't worry, Group 8 Corp has a perfect place for you. Asa tama ngaon sa Bisag Asa.
Cost classification. The process of cost classification entails dividing a group of expenses into distinct categories. When performing financial modeling or alerting management to costs that are thought to be more critical than others, classification systems are used. There are other ways to examine costs, which can be categorized as period costs or product costs. Generally, costs are recognized as expenses on the income statement in the period that benefits from the cost. Product costs. All expenses related to purchasing or producing a product are considered product costs. These expenses include direct materials, direct labor, and manufacturing overhead in the case of manufactured goods. Product costs attached to units of production as they are brought or made, and they stay attached as the products are placed in inventory to be sold. On the balance sheet, product costs are initially allocated to an inventory account. The costs are deducted from inventory as expenses, commonly referred to as cost of goods sold, and offset against sales revenue when the products are sold. Product costs are also referred to as inventoriable costs because they are initially allocated to inventories. We want to emphasize that product costs are not necessarily treated as expenses in the period in which they are incurred. They are treated as expenses in the period in which related products are sold. Period costs. All expenses that are not product costs are considered period costs. Period costs are applied to all selling and administrative costs. Period costs include things like common commissions, advertising, executive salaries, public relations, and office space rentals. Period costs are not included in the cost of manufactured or purchased good. Rather, they are deducted from income in the period in which they are incurred in accordance with accrual accounting principles. Don't forget that cost doesn't always exchange hands during the time that the cost is incurred. Cost behavior. It refers to how a cost reacts to changes in the level of activity. As the activity level rises and falls, a particular cost may rise or fall as well, or it may remain constant. For planning purposes, a manager must be able to anticipate which of these will happen, or if a cost can be expected to change, the manager must be able to estimate how much it will change. To help make such distinctions, costs are often categorized as variable, fixed, or mixed. Variable cost. A variable cost varies in total indirect proportion to changes in the level of activity. Common examples of variable costs include cost of goods sold for a merchandising company, direct materials, direct labor, variable elements of manufacturing overhead such as indirect materials, supplies and power, and variable elements of selling and administrative expenses such as commissions and shipping costs. Some of the most common activity-based are direct labor hours, machine hours, units produced, and units sold. Other examples of activity-based include the number of miles driven by a salesperson, the number of pounds of laundry cleaned by a hotel, the number of calls handled by technical support staff at a software company, and the number of beds occupied in the hospital. Fixed cost. A fixed cost is a cost that remains constant in total regardless of changes in the level of activity. Examples of fixed costs include straight-line depreciation, insurance, property taxes, rent, supervisory salaries, administrative salaries, and advertising. Unlike variable costs, fixed costs are not affected by changes in activity. Consequently, as the activity level rises and falls, total fixed cost remains constant unless influenced by other outside force. Mixed cost. A mixed cost contains both variable and fixed cost elements. Semi-variable costs are another name for mixed costs. Semi-variable costs tend to fluctuate in response to changes in output or sales volume but do not change directly proportionally to such changes. Both fixed and variable costs can be compared to these expenses. Regardless of changes in output or sales volume, one portion of semi-variable cost does not change. The other, however, varies in proportion to output or sales volume variations. Salaries paid to supervisors and costs associated with building, equipment, and plant maintenance are examples of mixed costs.
Kitchenware. Kitchenware that can be found in our restaurant can be a period or a product cost depending on its purpose and usage. The costs of things like ladles, spatulas, whisks, knives, spoons, pans, pots, cutleries, bowls, chopping boards, and other essential items in preparing and cooking food are considered product costs. This is because these items are directly involved in creating our products. On the other hand, costs of kitchenware such as flatware and dinnerware used when serving customers at the dining table are considered period costs because these are not directly related to the creation or production of the products. In other words, period costs are not attributed to a specific product or inventory cost like product costs. Therefore, period costs are recorded as an expense in the accounting period during which they occur. Furthermore, both the period and product costs of kitchenware identify as fixed costs because these are expenditures that do not alter in response to changes in output or sales volume. Simply put, fixed cost remains constant regardless of whether output or sales increase or decrease. While the total cost of these charges is constant, the cost per unit changes according to output or sales. Menu. Our restaurant offers different cuisines, and the menu is filled with an array of flavors as we ensure quality ingredients are used in each recipe. The costs associated with the menu are considered product costs. This is because product cost pertains to the costs involved in producing a product. If the goods have still not been sold, the cost can be recognized as an inventory asset. It is added to the cost of sales as soon as the product is sold and reflects on the income statement as an expense. The materials for preparing and cooking our restaurant's dishes include eggs, spices, herbs, condiments, meat, fruits, vegetables, and the like. Moreover, the costs of these ingredients are considered variable costs because these are those that alter directly proportionally to variations in output or volume of sales. These costs often rise and fall in conjunction with variations in production or sales. Even though variable costs fluctuate on an aggregate basis, they stay constant per unit.
Furnitures and fixtures. There is a long list of furnitures and fixtures a restaurant needs. Dining tables and chairs, office table and chairs, kitchen furnitures such as prep tables, shelves, and racks. These are considered as period costs as they are generally more closely associated with a particular time period than with making or acquiring a product or performing a service. These period costs are classified as assets as they have future benefits. The depreciation of these assets is a fixed cost since it incurs in the same amount per period throughout the useful life of the asset. Rent. Bisag Asa restaurant will rent a place for its operations. The monthly rent is a period cost since it is an administrative function of the business. Moreover, it is a fixed cost because rent stays constant regardless of the quantity of goods or services produced. Utilities. Utilities such as electricity, water, telephone, and internet charges are period costs as these costs are not directly tied to the production process. These expenses are classified as mixed cost, for there is a charged fixed rate for using a base amount and an additional variable cost will be charged for any usage over the base amount.
Machinery and equipments that can be found in kitchen which is necessary for our business to create foods are microwaves, grills, oven, gas ranges, mixers, freezers, slicers, and food processors. The depreciation of this machinery and equipment used by our business is considered a product cost since they are utilized in the creation of our product, and it will be allocated or assigned to the goods produced. The allocated depreciation will be included in the inventory cost of goods manufactured until the goods are sold. Depreciation of machinery and equipment used by our business to create food is a fixed cost in nature because it occurs at the same rate every period throughout the duration of an asset's useful life. Since depreciation is independent of activity volume, it cannot be categorized as variable cost. Next will be the depreciation of machinery and equipment used by admin. The depreciation of assets not directly related to the production process is considered to be a period cost. This means that they are not related to the cost of one product or inventory cost of a business. Depreciation of machinery and equipment used by admin is also a fixed cost in nature, just like the depreciation of assets used for cooking. Again, since depreciation occurs at the same rate every period throughout the duration of an asset useful life.
For the last part of this video, we will now talk about the salaries for the cooks and servers, the salary for the security guard, and the insurance expense. Salaries in terms of the direct people making the food, which are the cook, the costs for which are variable. This is because their salaries depends on an hourly rate. The same logic applies to the service. Additionally, we plan to hire part-timers, so an hourly rate seems more beneficial for both parties. This type of salary are also product costs as these salaries are directly associated with the food and service the restaurant has to offer. However, the salary for the security guard is fixed because it is on a fixed rate. Additionally, it is a period cost for it is indirectly connected to the food served in the business. Lastly, insurance is a fixed cost for the reason that this remains the same regardless of the production output of the restaurant. Contact us through these channels. Thank you for watching.